One of the most common questions I get in my coaching, I've been trading for 35 years, trading stocks for 42 years. And one of the most common questions is, how can I trade on one chart with one setting? Whether I want to be a day trader, whether I want to be a swing trader, whether I want to be a position trader, or even, dare I say, a scalper. So what I'm going to do now is just go through some of the rules which I would do. Now, 35 years ago when I first started trading Forex, if I had known this, which I'm going to show you in the next 10 minutes or so, then I wouldn't have suffered the losses that I did in the beginning and the pain that you go through in the beginning. So in this, we're going to look at the rules behind it. It's a rule-based system where you can trade. I'm going to specifically talk about trading gold, which is moving big time at the moment anyway, but it works on any time, any time frame, and you just choose which time frame you prefer. I'm going to start with a 3-minute on gold. So have a look at this and see what you think. Now I want your feedback. If you're going to use it on a demo account, then please let me know how you're getting on. And if you are in the Get Funded program, which I do, then you're going to love this, I think and hope. And it is a game changer for many people, and it makes a ton of money. And this is why I called it the gold cash machine, because you can be in and out very quickly and bank money. You know, if you're looking to make $1,000 a day, that's very, very easy. And I'll go through that now. So before I start, this is gold. This is a 3-minute time frame. And we have loaded up some of the tools that we use in the Get Funded program, price action charts combined with parabolic trends. We've broken it down somewhat in order to make it much more, much more methodic, I guess is the word, because you want to have a tick-based system. So everything has to agree in order for it to go. Because we're talking about people who've never traded before. We're talking about people who might be complete beginners. It might be that you've traded for 2 or 3 years and you've not got the consistency that you require. And that's what it's all about, isn't it? It's a learning curve. You never stop learning, and that's really, really important. And in the Get Funded program that I do, we can design bespoke charts using the same tools on different time frames throughout. Whether you want to be a swing trader, day trader, position trader, or scalper, doesn't matter. It's just a matter of adjusting your charts accordingly and the time frame. So let's go through these. Let me get rid of some of these here. So let me dial down a little bit, and and then I'll explain a little bit about what we're looking to do, and I'll give you the rules about how we get into the positions before we actually do. All right. So one of the most important rules is divergence. Divergence has to play an important part, positive or negative. The first thing you might notice is that here and here we can see there is negative divergence. This tool here automatically gives you the divergence. Negative divergence is red and positive divergence is green. Can't find one there, but there we are. Oh, there is one, and I'll show you that in a minute. So that's one tool you can use immediately. There's another one there, if you can spot that there. Very nice indeed. So once we get the divergence, which is the important tool, positive or negative, I will go into more details on that in a minute. But then look for a breakdown. So when we're looking for a sell after divergence, rule number 1, we are looking for the moving average here to turn red. Once it turns red, that is your trade. The stop is on the swing high, 15 pips, and you go for 2 to 1. Okay. Now, if, as an example, in this instance, Friday night, there was positive divergence and it went green and you don't reach your target, then of course you are going to, you can actually reverse it. You're going to close the short position, you're actually going to go long in that instance. So let me go into a little bit more detail. So divergence, negative, followed by a red moving average, and then the short position. Your stop is to swing high, 20 pips, 23 pips, and 2 to 1, 46 pips. Now, if you are trading with one lot, let's put some notes here. So one lot equates to $10 per pip. Makes sense? Now, in order to trade one lot, you do have to accept that in this instance you're going to risk $230 to make $460. That's the scenario. Very, very simple. Now, if you're running a funded account, which is what it's all about at the end of the day, most people haven't got sufficient funds or don't want to put sufficient funds in their account to make decent money. So in this instance, this would have banked $460 in probably less than an hour. This is 3-minute chart, so it's definitely, well, half an hour even. So this is your cash machine. This is how you bank that money. Now, if you have a much smaller account, say $1,000 account, you're going to have to lower your lot size. So in that, you do half a lot, and therefore it's 0.5, which equates to 50 cents per pip. Makes sense? And so therefore in that instance this is worth $230. So you need to be aware of what you're risking in order to see how much cash you can raise on the day from your cash machine, as I've called it. Now, there are some instances where it's not obvious where there's divergence, and I'm going to go into the details here. So in this instance you would have banked 29 pips, $290. In this instance here you would have banked $283, and in this instance you would have banked $1,000. In this instance here you banked $200. In this instance here you banked $460. In this instance here you banked $455. $483. This is in a day, by the way. This is in one day. Here you'd bank $510, $410, and so on and so forth. So what I'm going to actually do is go through each one of these trades which you could have taken on Friday. We're on the 22nd of September. And so it would have been the 20th of September 2024 if you're looking at this 6 months down the line. And so let me go over the trading rules that have to be met. So let me give you the trading rules. Trading rules. Number 1 has to be, we have to have divergence. We don't mind either. Negative, of course, for a downward move, positive for a upward move. Number 2, we must see green moving average or a red moving average. So a green moving average for a buy and a red moving average for a sell. Simple. It's not rocket science, this, guys. You are going to trade with 2 to 1 to reward. Excuse the capitals there. 2 to 1 risk to reward on each trade. Now, the other thing is, if the trade goes long but then it turned red, you're going to have to pull out on it. If you've gone for a much bigger target up here, for instance, I wouldn't recommend it because we're talking about a cash machine here. We're looking to raise cash after cash after cash. You're going to get busy. And so the other thing is, as I think on my feet, is that you need to trade high volume times. Now what that means is that you're going to trade the London Open, 8 AM GMT, thereabouts, and then the New York Open. But don't trade before news events during the New York session, because you're just going to get blown away. So what I've got to make the market, wait for the markets to move down, to settle down, and then once they've settled down, then you can actually make some very nice decisions. We're going to go into a little bit more detail now, and I'll add to this. So what I've got here is part of the Get Funded program is the stochastic special settings, and I also have here the money flow index. The money flow index is a really clever way of getting into divergence much earlier than is often recognized. So what I mean by that is, let's go to this one here, widen that out a little bit, and we can see as an example this positive divergence here, okay, which is continuation pattern. And here, let me draw a line, oops, there. So that is the positive divergence there. So sometimes this red and green line here on your chart does not always show you the divergence. So you do need these tools, which is extra comfort, if you like. So let's go through these. You have divergence here. On this move here, it's gone green. Notice that line there. And it can be clarified and confirmed with this here being the money flow index. Now don't forget, I'm here to answer questions. If you have any questions, of course, if you're not sure of anything, then please contact me. Let's go through the rest of the trades. A little bit of detail. So here, as an example, we can see this confirms the divergence on the oscillator. There's no divergence on the money flow, but that's fine. One or two indicators telling us there's divergence is enough. Positive divergence is a buy. Negative divergence is a sell. So here's another one here. So as the price shows us the divergence positive, it stays red, by the way, it stays red for quite a while. You've then got to wait for the price to change over, change of character as we call it. And you want the candlestick to go green, Heikin-Ashi candles here. And also notice a couple of things. After the divergence, the stochastic, the oscillator, starts pointing up, and then the moving average goes green. So that is a very early, we could have got in earlier there. So now, because it's a 3-minute chart, it's pretty quick. It's not something that I will be sending as a signal because it's so quick, but it's something where you do need the charts to confirm. So here, for instance, you could have gone really early here with a 35 pip stop and a 2-to-1 there. So again, this trade here, for instance, is this short trade. After divergence, negative shown on the chart automatically, you're going to have a short position once this goes red. You could have got in earlier maybe, but nonetheless, you just want to make sure that your stop is above the swing high, 32 pips. So if you're one lot, you're risking $320. Are you happy to risk $320? If so, then you go for 2-to-1 and you bank $640. So this is adding up now, isn't it? As you see these things, even if you're much lower lots, you can see how this is going to add up into your account every day. I wouldn't be looking at this every day. This is not something you would do that, but I would segregate maybe an hour in the morning, maybe an hour in the afternoon during the New York session. So it's a fantastic way to trade, and just make sure the colours are in line, and just get in as soon as possible once they do, and that way you can actually see how to make money much more often. Now this works on any time frame, as you can imagine, the hourly, the 4 hour, the daily, 2 hour, whatever you want to work on, the 30-minute. As a day trader, it's fantastic. Now here's another one here. Let me just show you these ones before I go off to my golf. And we can see that we've got positive divergence on the money flow index. While it's red, it's really important, but you've got to wait for the conversion, because it could just continue down and down and down, can't it? So you've got to wait for the conversion and the change of character, and once it goes green, then get in at the earliest possible time. Swing low, that's less than 10 pips there. So you can get in there, and then the other thing you can do, if you're happy to, because this is set and go, you can actually just wait and see how far it goes. So there's $850. There's $1,000. That's $1,000. There's not one here because there's no divergence. You could have traded it, of course, when it goes green, and there's swing low here, but I want to see a divergence, so I have to see divergence like this here, and in that instance the 2 to 1 would have been much more valid. The price didn't go down, and gold is bullish anyway. So this one here was the short, but becomes a long, doesn't it? Let's get rid of that. So this long here, as soon as it goes green, then you've got to swing low, 15 pips, 2 to 1. So a fantastic system of making cash regularly. You know, we're not talking about waiting weeks for a few hundred pips. You talk about banking 40, 50 pips, 60 pips on a regular basis on a 2 to 1 risk to reward. So it's a fantastic way to trade, actually, and something, if you are a scalper, of course, you can just get in and out quickly. You can bank 20 or 30 pips very, very easily on these this kind of system. But the key to this, as I mentioned earlier, are the rules. Make sure there's positive or negative divergence, number one, really, really important, on the money flow index, on the RSI oscillator, or it's showing on your chart automatically anyway. And then wait for the line to go green for a buy, red for a sell, and then ensure that you've got 2 to 1 risk to reward, and then trade during high volume times, London Open, New York session. Any questions on this, then please contact me. It'd be lovely to hear from you. I think, you know, you probably agree that trading is quite a lonely profession. So it's just nice to hear from the VIP members how you're doing, and if you need any help. I love helping people. It's what I do, and I really love to support you in your trading journey.